Hello, everyone. I'm Arvind Chari, Chief Investment Officer at Q India UK, an affiliate of Quantum Advisors, which is, of course, the sponsor of Quantum Mutual Fund and Quantum Asset Management Company. So good to speak to you again. What a last 10, 15 days it has been for the global markets and for the Indian markets, especially in India after the state government elections got announced in the early December, where BJP and Modi, Prime Minister Modi's party won three out of the four large state elections, kind of not entirely expected by the market. And then the about turn by the US Fed 2 days back, completely changing the scenario. So to an extent that if I look at Indian equity market performance on a YTD basis till about 14th or 15th December, if I remove Nasdaq, which is where the large tech companies, the Magnificent Seven, as Bloomberg calls it, has had a significant rally. If I remove Nasdaq, barring Nikkei, which has done about 25% YTD returns, Nifty in local currency terms is close to about 17%, higher than many other countries, definitely higher than MSCI emerging markets, MSCI Asia, and of course, way ahead of China and Hang Seng, which has actually had negative returns. So India has done really well over the last 1 year. As we've been saying, it's a reflection of some improvement in macro recovery, better earnings estimates, some signs of capex where you're seeing companies now seeing the opportunity either in exports or in domestic market. There has been some government policy towards it, and we are seeing some signs of first improvement in increase in capex, and that was sort of reflected in the GDP numbers, although the GDP number at 7.6% was actually higher than what it should have been from a expectation perspective and also from a steady state perspective. But there were signs of capex and investments, and which kind of portends well for what do we expect over a period of time. But as I said, in the last 10 days, it's been a kind of a vertical spike in the Indian equity markets and in some of the stock prices. And what's good to see also is that if you see in the last few days, large caps have either done better or done as much as against mid cap and small cap as compared to what has been the trend in the last 1 year. And that's what we had said last month as well, that the valuation in the mid and small cap space is very, very expensive in certain pockets. There is some values in some stocks, but at the broad level, the index level, it seems very expensive. Whereas in the large cap liquid space, although the index P ratios still look expensive, but there are fairly large, sizable opportunity liquid names which are attractive, which are actually below some of their long-term multiples, say in private banking or in IT services, and you should see a lot more money coming in. And we've seen some increase in foreign FPI, foreign investor flows, and we are seeing a larger allocation into large cap as compared to mid cap, small cap. So I think that trend should continue in going ahead. Uh, uh, Given the fact that BJP had such a large victory in the state elections, going into the May 2024 general elections, where Prime Minister Modi will stand for a re-election, third time election, I think the markets will basically price in the fact that BJP will come back into power, and that should see some leg up. If that doesn't happen, you see market reacting. But as we've written and as I've spoken before, in the long term, it does not matter. Equity market returns and economic activity tends to do what it's supposed to do, irrespective of which government is in power. But you might see some market volatility up and down going into the election and after the election, depending on what results come. But that's a factor of uncertainty and unpredictability that is always will be there when you invest. But there are ways and means to figure out how you can manage that and deal with it. On the Fed action, it was can call it a U-turn, it was call it a pivot. Three months back, they were not expecting rate cuts or such amount of rate cuts. But within 2 3 months, they've seen inflation coming down. They feel that they have hiked enough, five quarter, 5.5% interest rate is tight enough to get the economy to slow down and the inflation to come down. And they've completely pivoted in the way they've uh, sounded to the markets with the Fed governor saying that they did discuss rate cuts. And the market has already factored that in. And if you see the US 10-year treasury bond yield, it has gone now below 4%. It was very close to 5% just about two months back. That's been a 100 basis point move down. You've also seen on the shorter end, the 2-year bond yield coming down, which is more sensitive to Fed funds rate. And then the market is already pricing in that the Fed has won the inflation battle. And now they will again focus back on financial stability, on economic growth and employment, and they will cut rates. There's a lot of expectations going in, but as of now, there's been a significant bond rally. And generally, in the short term at least, this tends to be good for emerging market assets, emerging market bonds, emerging market currencies, where because as the Fed kind of indicates that they're going to cut rates, whether the other central banks don't, the US dollar will tend to depreciate. And we've seen that already happening in the last 2 days, and which is good for emerging market asset, emerging markets currency. And hence it is also good for India in the sense of bond yields. We've also seen about a 10-15 basis point drop in the Indian 10-year bond yield from about the 730 level to about 715 levels after the Fed action. And the repo rate is at 6.5%. So there is still about some spread for it to cut. Markets in India are also expecting the RBI to cut rates very soon. We don't have that view that the RBI will move very quickly, because if you look at the Indian inflation, Indian growth, Indian repo rate, it's at long-term averages as compared to the developed world where rates and inflation were so much higher. I don't think RBI needs to cut interest rates anytime soon. I think the economy is doing well as it is, and they can maybe they don't need to take off liquidity. They can keep the liquidity in the system. But I think the RBI will stay put. But what you will see is that because of this expectation from the global markets, as well as the prospect of India being included in the bond index, as we've spoken before, that should mean that much more foreign money will come into the Indian bond market as well. And that should kind of lead to what we call a spread compression in the interest rate. So Pankaj, who runs Quantum Dynamic Bond Fund, has been positioned for this eventuality of a turn in the Fed language, kind of RBI holding and pausing and keeping liquidity okay, and this prospect of buying by foreign investors to capture this, to take part in the Indian bond index inclusion. And I think that portfolio and that performance has been reasonably good. Uh, so the other aspect of this Fed and interest rates, of course, tends to be on the currency. So if you look at the INR, it's actually been the least volatile currency over the last year, and the RBI has actually kept it in such a tight band by intervening on both sides. I don't think that is a very prudent and a good thing to do at all times. But what now with the Fed going easy on rates and inflation, that should also allow the RBI to let the rupee move a bit more freely. And I think the immediate response should be that the rupee will kind of appreciate given higher foreign inflows. But the RBI will, I think, allow rupee to find its own level and kind of manage the volatility and uncertainty around it, but should allow the rupee to a bit more freely move. Whatever I've spoken, this tells you how uncertain and how short term sometimes and how unpredictable markets and investments can be. And if we are in December, we are looking at 2024, 2023, we had a lot of worries about how much the Fed will hike, where will the eventual interest rates be, what would be inflation, will there be a bigger problem between Russia and Ukraine? Will oil prices shoot up because of that? And as we look at 2023, we've seen market returns being all over the place. In India, it's been generally uptrend, but it's been all over the place globally as well. And as we look for 2024, we have similar worries. How much is Fed going to cut? Is the Fed right in cutting interest rates sooner? Will inflation remain low? Will there be a China issue again that gets blown up. There are constantly uncertainty and unpredictability that we as investors and you as investors face. And markets will remain like the markets will remain uncertain, unpredictable. But if you want to ask Santa Claus for a Christmas gift and ask Santa that for to give you some certainty and some predictability in terms of your returns, you should think about the quantum's research and investment process that it follows for the value equity strategy, our flagship strategy. This simple process of trying to buy liquid companies, sifting out for governance, avoiding certain names, certain groups, certain businesses. So, and then trying to buy at a discount to the intrinsic, what we call 2-year forward intrinsic value, has actually worked very, very well since the year 2000. So if you see what we think stock prices and our portfolio should do 2 years out, and what we have achieved and what we have delivered over a period of time, if you see those two charts, and you should see that in the quantum presentations, that just shows, irrespective of whatever happens in the market, based on what we think are normalized levels and normalized way of investing, we are able to, say what we think will happen and actually deliver to that. That is a wonderful thing to have in a world which remains uncertain, in a world where asset prices remain volatile and unpredictable. The quantum process and the quantum investment portfolio and the quantum value strategy offers you that aspect of certainty and predictability. So do check that out. Uh, uh, Christmas is coming through, and will be very soon in the new year. I'll hope to I'll hope to speak to you again in the new year. Till that time, have a happy, cheerful, and have all the cheer in your life. Or as we get into the Christmas holidays, and we'll talk to you in the next year again. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.